you'd have to go back to 1980 to find a bigger move, I think.
Mm-hmm. Yeah, most likely all the way back to 1980 when we had that initial silver spike back then.
Yeah, this is far different what's going on now. I mean, now obviously back in late 70s up to 1980, that was the Hunt brothers trying to actually corner the market until the COMEX rules got changed. What's happening now, and I guess I'm going to try to wrap into this the Japanese carry trade unwinding. They used the carry trade for years and years to borrow in order to fund. First started off borrowing in Japanese yen and investing in dollars, getting a higher yield. It was like a no-brainer, basically. But what's happened is that spilled over to far more than just buying U.S. Treasuries. It spilled over into buying assets. It was a funding tool, basically. And one of the things that it funded were shorts on gold and silver. So what you're watching now is the unwinding of 20 plus years of suppression. As the leverage unwinds and there's less and less leverage, prices are going to ultimately move where fair value is, where they should have been, and that's probably lower stock prices, and it's definitely higher metals prices, because once you take leverage away from a short seller, they have only one thing they can do, and that's buy to close the position. And I think that's part of what you're seeing now, is that the carry trade's unwinding. At the same time, people are figuring out that, hey, silver's been in a shortage for 5 years. I think silver's got much further to run. I think gold's got further to run. But even now with the ratio at 69 to 1, it's still out of whack. I would say it's the gold to silver ratio is out of whack anything over 35 or 40. And 35 to 40 is still elevated, but we got up to 120, which was just absurd. And anybody who did step up and buy silver has done far better than gold. Like you said, I mean, silver's been the best asset class to own this year.
Yeah, and we really are in unprecedented times, because here's a chart of seasonality. The red line is the price so far of this year, and you could see the blue line is a 5-year average. The orange line is a 3-year average of seasonality, and we are tracking well above those 3 and 5 years. Now, even if you go all the way back and do a 30-year average on price moves for the last 6 or so months, I mean, we are still well above all these other averages. Something different appears to be in the midst here.
Yeah, it's totally different. This is not a seasonal move. This is a repricing. This is the reset. You're watching the reset of prices happen before your eyes. And I think we're still early in that. I mean, I believe you can see silver well over $100 just in the current episode before this episode is done.
Yeah. Well, it's interesting because, I mean, you're one of the few people that have ever heard talk about this so prominently, and that is eventually we will get to a point of a failure to deliver. And lo and behold, a day after Thanksgiving, a couple of weeks ago, there appears to have been maybe possibly quite truly a failure to deliver on the LBMA at the tune of $2 billion worth of silver. Now, it seems like they were able to patch it up. Or did they? Because the price of silver today is at $60+. To the extent that they could, they patched it up. But I mean, they didn't bring the price down. They weren't able to control its ascent. What happened there a couple of weeks back? I'm interested in getting your take.
Well, the bottom line is you cannot print silver, you can't print gold. And that's what they did with the contracts. They printed the contracts to be sold short, but there was no silver behind. So now we're getting closer and closer to the day of reckoning, and that day of reckoning will end in a failure to deliver. And, there's people out there, you can read in comment sections, people say, oh, well, COMEX can never default. It's in the contract language that they can just simply declare force majeure. Well, bottom line is you can call it anything you want, but if somebody who bought a contract in order to take delivery does not get delivery and gets cashed out in fiat currency, that's a failure to deliver in that contract holder's mind. And it'll be broadly seen as a failure to deliver. They can bring the legalese up if they want and call it force majeure or anything else, but this is going to end in a failure to deliver. And it will be a failure to deliver in New York, in London, and more than likely also in Shanghai.
And what's interesting is that they shut down the entire CME coincidentally at the same time. Now they're denying that it had anything to do with it, do with that particular event. But come on, like both went hand in glove with each other. What's your take on that? I mean, what were they about to lose control of the paper market if they didn't shut it down?
Well, as you can see, they are losing control of the paper market. And what they did was they had a do or die moment. So what did they do? They pulled the plug and gave themselves, 8 or 10 hours in order to try to fix things under the surface. Now, that said, it appears like this last episode is fixed. But what about the next one? And the one after that, and the one after that? Like I said, you can't print silver, and that's the problem. There's not enough silver in comparison to the amount of contracts that are trading.
We've got the bull scenario here for silver hitting upwards of $91 based on the machine learning model that this tool uses. $91 bull scenario. Bear scenario is at $45 or $46, you could say. And what's interesting, it says $91 because this just broke a couple of days ago, or yesterday, I should say. There's been this massive February 2026 strike call option, and the open interest has nearly doubled to 7,100 for $80 and $85 strike call options on silver. So someone massive is placing a bet on silver right now at the tune of $85 by February. And interestingly enough, this chart says around that same range as well, a little higher, $91 here. Have you heard anything about this open interest spike on silver?
Well, you've actually seen it for a couple of years going on. After first notice day, in the past, the amount of contracts outstanding would shrink steadily to final delivery day. In the last couple of years, what you've seen is you get X amount of contracts standing on first notice day, and every month that amount standing for delivery has increased pretty much on a daily basis. So the whole character has changed. COMEX was not seen as a delivery hub. It was not seen to be a risk that there would be a failure to deliver. But at this point, it's pretty clear, everyone can see that you've got these contracts piling up, standing for delivery, but yet the inventory continues to shrink. The inventory is not there to meet that delivery.
Yeah. So, I mean, it seems like we're heading into the end game here.
We are.
Also, you're starting to see these cracks on the wall. A failure to deliver a couple of weeks ago. Strike call options on $85 silver to strike on February. You're seeing the price break $60. I mean, is 2026 going to be the year where they just lose control of this pricing mechanism?
We're almost halfway through December, and I'd say, 2026 is probably the year, but we got to get to that first. I mean, there's just so many. We're talking about silver right now, but there's so many things out there that tell you the numbers, the information that we're getting are bogus. I mean, look at cardboard packaging. That's down. That shows you that there's less. There's less commerce. Look at the foot traffic through Las Vegas. That's down 18%. Look at some of the earnings reports from the retailers. The retailers, the very, very, very high end is okay, and the cheapest end is getting bigger and bigger because people are scaling down what they're buying, what they're spending. They're scaling back. We're just getting information on a daily basis that is proving the numbers that BLS is putting out to Wall Street, out to the public, that those numbers are bogus.
And we also got news today. I mean, this is just breaking news at the time of this recording, and that is that they have announced the 25 basis point rate cut today. So, what do you make of that?
And I think that was somewhat baked in. I think that was pretty much baked in. I mean, we knew we were going to get a quarter rate cut. Now the question is, where does it go from here?
Mm-hmm.
I mean, that's the way markets are. They don't look backwards; they look forwards.
And
what
also,
have you done for me lately?
And also, they cut the Fed funds rate 25 basis points, which is associated with the shorter end of the yield curve, but the long end, the 10 and 30-year yield curve, has actually been going up. Which is market not buying what's been the case.
Yeah, that's been the case. You could go back to 2024, the second half of that year, after the first rate cut or cuts of 1 percentage point, bond yields, 10-year and 30-year bond yields, actually went up and not down. And that's happened again, not to the same extent after the last cut, and we'll see what happens with this one. The world is so leveraged at this point everywhere that if you get higher rates, it's going to bankrupt various entities. And the problem in today's world is that when someone loses so big that it makes them insolvent, then the winner doesn't get paid. And the winner loses on that trade also because the loser can't pay. And that's the danger with interest rates going higher all over the world.
Yeah, and it goes
when
back
I say interest rates, I'm talking about market rates. Yeah, I'm talking about market rates, not what the central bank does, because central banks, like you saw with the U.S., they can lower rates, yet the yield curve go higher, and that's where we are now.
It's just pretty much setting the stage for yield curve control, where they have to buy up their own debt to lower the interest rate? They're
going to have to do something. Yeah, they're going to have to do something because the demand is not there to push rates down. So, yeah, you're going to have to central banks all over the world, I think, performing YCC.